high dividend stocks in Bursa, Malaysia for 2024. 2 high dividend stocks a week for dividend chasers like you invites passive income inside, sends active income away. These stable dividend stocks are currently giving 5% or above just for dividend returns. Kicking things off, we have Power Root. At the current price, dividend yield for the past 12 months at a respectable 5.5%. Power Root, the maker of everyone's favorite herbal remedies, no matter what ails you. Power Root does not just make drinks, they craft liquid motivation. If tiredness is a villain, these guys are the superheroes armed with cans of energy blast. For the past 1 year, its stock price is stable at around 2 ringgit-ish range except for a recent dip. Now you want to follow and subscribe, but if you prefer weekly email update, there's a link in the description below or in bio. Now how likely is this dividend payout can be sustained or even go higher in the future? For that, we look at the percentage net profit margin by dividing net profit with revenue. In this case, it's 59 divided by 455 million. That is 13%. Good profit margin. Also, we want to analyze net profit growth. Looks like it has grown 125% from 26 million to 59 million. Woohoo! Talk about can't stop, won't stop. But looking beyond the recent year, its profitability growth for the past 5 years is one hell of a roller coaster ride. Disclaimer, this is not investment advice and it's not a recommendation to buy the dividend stocks cover, as I do not know your financial needs, circumstances, risk appetite or investment objectives. Then next, we want to look at these stocks dividend risk to you. For this, we look at a company's leverage and shows the extent to which operations are funded by lenders versus shareholders. Financial term for this is gearing ratio. Now in the business world, a gearing ratio refers to a company's financial leverage, essentially how much debt they use to run their operations. Debt can help a business grow faster, just like in a racing. Higher gears lead to greater speed, but too much debt can cause problems. For example, if interest rates rise fast, heavily geared companies can go broke overnight. So you have your gearing, which is your total debt minus cash divided by shareholders' funds. For Power Root, its gearing hovers around 10%. Nothing to worry about. RCE Capital, at the current price, dividend yield for the past 12 months stands tall at 13%. Disregarding the special dividend, its dividend yield is still at a mouth-watering 6.8%. RCE Capital sounds about as exciting as watching the grass grow or the paint dry. Consumer lending, payroll collection, commercial financing sounds drier than month-old toast, doesn't it? But somehow these master money lenders have the magic touch for making profits materialize even more often than the free appetizers their hungry shareholders love. Their secret sauce? A pinch of consumer financing here, a dash of commercial lending there, and voila, the bland business pot is transformed into a dividend cash cow. For the past 1 year, its stock price has went up 50% from 1 ringgit 60 cent to close to 3 ringgit. So how likely is this high dividend payout can be sustained or even go higher going forward? Now for that, we look at the percentage net profit margin past 4 quarters by dividing net profit with revenue. In this case, 138 divided by 323 million, and that is 43%. Outstanding. And next, we want to look at its net profit growth. Looks like it has grown only 4% compared to the year before, 133 million to 138 million. Its year-on-year net profit growth for the past 4 years has been in the 7 to 15% range. As usual, the next thing to do is to look at this stock's dividend risk to you, checking for possible red flags. The gearing ratio again measures a company's debt burden. When a company takes on loans to buy more assets that generate juicy returns, that can ramp up profits fast and furious. During good times, tends to crash the hardest though when the economy hits a pothole. For RCE Capital, its gearing has always been sky high at 100 to 200%. It says the practice of keeping minimal cash and bank balance has always been intentional in its nature of business, so if you're a shareholder, you just have to live with it. Of course, this may improve or worsen in the future, so if you want to be aware of future changes, do follow and subscribe. If you prefer weekly email update, there's a link in the description below or in bio. Any question, ask below. Here's your next high dividend stocks clip to watch. Also check out more of these global investment strategy videos, updated monthly only for CF Liu channel insider members.